Welcome to your Economic Developments and Market Movements Update for February 20th, 2026. We'll dive into today's key global events, from geopolitical tensions impacting major markets to significant movements in commodity and bond markets. Let's begin with the major economic and political developments influencing today's trading. Geopolitical tensions are once again at the forefront, creating a climate of caution in global financial markets. The U.S. has increased pressure on Iran to abandon its nuclear ambitions, issuing a strong warning that, quote, bad things will happen if they fail to comply. The U.S. president has indicated a decision on potential military action will be made within the next 10 days, escalating uncertainty. How have financial markets reacted to this heated geopolitical environment? Markets traded cautiously today, reflecting the heightened risk and uncertainty stemming from the Middle East tensions. Major stock indices across both the U.S. and Europe retreated today as investors moved away from riskier assets. Conversely, government bonds saw slight gains, demonstrating their typical safe haven appeal during periods of heightened market anxiety. Moving to the Australian market, we saw some distinct movements today. Australian yields jumped significantly, increasing by 4 to 8 basis points across the curve. This jump was driven by the latest figures indicating the Australian labor market is on a much firmer footing than previously expected. Finally, let's look at the commodity markets, specifically crude oil. Mounting tensions in the Middle East have directly impacted crude oil, driving prices to take another significant step higher. The March WTI contract rose 2.3%, closing at $66.67, underscoring the market's sensitivity to regional instability. That brings us to the close of today's economic review. To quickly recap, geopolitical tensions led to cautious trading, with stocks retreating and oil prices climbing significantly due to Middle East concerns.